Hello, hello. This is Pete Osling from the Bending Rules podcast, where we talk about all things entrepreneurial. And I sort of, as I mentioned on a previous podcast, expanded that to like not just entrepreneurs, but what I call rule breakers, people that try to achieve things that are sort of out of the norm, if you will. And sometimes they have to break the rules. And there's a reason for that, and I'll get into it in subsequent episodes. But I'm excited today to have an entrepreneur that is actually visiting us from Mexico City, where he is starting his next company. And we'll of course get into that. Nick McEvily, and sorry, Nick, if I didn't pronounce that correctly. Hopefully, I did. But
Perfect.
I had the chance to be introduced to Nick so I'm excited to kind of share his story. I'm going to learn a lot about his story too. So this will be a really interesting one, including his background in product design and tech and some of the startups he's done there and how that's led him to his latest venture, which will be I'll let him talk about a water company in Mexico City and why he chose there and why his entrepreneurial roots took him back to that place as well. So anyways, Nick, welcome. Thanks for being a part of this and looking forward to get into your journey with our audience here.
Oh, it's a pleasure to be here around other rule breakers and excited to figure out how we're bending and breaking rules together.
Excellent, excellent. Well, okay, so Nick, like where I like to start, I mean, I think before sort of getting into all the things you've done and successes and failures and the teachings that you're able to impart today, for me, like going back a little bit in time to the entrepreneurial instinct, it's sort of one of the things that I think podcast listeners are curious about is sort of where were the origins of that for you? Like, were you an entrepreneur? Did this happen when you were very young? Was it something that, you were in the workforce and you were displaced and it's like, oh my gosh, I need to do something different? Or did you find you couldn't just tolerate working for people? And so there's all these sort of different incarnations of
Yeah,
entrepreneurs. And maybe you can just tell me a little bit about your background and how you found your way into entrepreneurship.
sure. It's a mixed bag for me. I'm lucky to come from a line of entrepreneurs. My grandfather had some businesses. Both my parents started their own businesses. Um, and when I wanted to step out to the path of entrepreneurship, I had a lot of encouragement. Um, and I think it's partially I didn't enjoy working for other folks. I asked the question why too much and didn't get good answers. And if you can't tell me why I'm doing something, this is the case for any intelligent teammate I've had since. If you can't explain the why, then your leadership, believability, and credibility is really impacted. And I asked myself, like, why am I dedicating my life and time to this person's asinine direction? Um, And so when I built up the confidence or maybe hubris, I ended up trying to start a company myself, got humbled, and spent a number of years as a number two at some startups, kind of learning the ropes and learning from other people's mistakes, and was able to start my own company. Was actually asked to join as a co-founder of a company, which is an unorthodox path into entrepreneurship, but found my way and just haven't been able to let it go just because it provides a level of freedom and a level of anxiety that you can't really find anywhere else.
Yeah, no doubt. So, you mentioned something that I mean, I think both of your parents being entrepreneurs, your grandfather, and so you have this sort of family with a risk-taking profile, and
Yeah.
that to me is one of the things that I always look for in entrepreneurs is how do you develop a risk-taking profile? I mean, one, I mean, I think the origins can be family. I mean, in my case, that wasn't the case. I mean, I have a very conservative family, so in terms of their professional careers and things like that, and you know, they're finding those origins and then deciding to exercise that muscle is an important step. And it's great you had the encouragement, but you mentioned, okay, you decided to go down the path with one of your companies and maybe the first one didn't work out. But again, what did you learn from that that
Yeah.
encouraged you to kind of keep going,
Yeah.
and start your next company?
Yeah. Failure is definitely a part of the entrepreneurial spirit or an appetite for it. um, and I've been trying to work more recently on rebranding the concept of failure and thinking about it as just attempts. And the more shots on goal I have, the better I get. And I think we'll probably cover that later on in the podcast. Um, but I was able to early on define myself as a designer. And so designers, I think, have an innate distaste for the status quo. Designers are interested in how to optimize things, make things better. Um, and so it was through my design eye and the design lens that I discovered that entrepreneurship was the way to make money off of the things that were not working, and how I could potentially solve them. Um, and those things have been in parallel for my entire career. The designer in me and the entrepreneur in me, constantly looking for problems to solve and elegant ways to solve them. But got my degree from a human centered design program at Cornell University that really taught me how to iterate, how to test things, how to stay humble and persistent. And I think even before that, my appetite for failure came from my time as a child actor. I don't want to spend too much time on this part, but
Right on.
lived just outside of New York City growing up, and went into audition for a couple of different commercials and small gigs. Got a few, um, but it was kind of exposure therapy for rejection for me.
Yeah.
You go in, you think you're a good fit, you bring your best, and you fail 70 times. It ended up being like 70 auditions that I failed, and I think 3 or maybe 5 that I got. Um, and after the 10th, 15th, where it was like it hurt a little bit, but I saw all the other guys or kids in there, and was comparing myself to them in all these different ways, but realized that it was okay. It's just like that if it's not a good fit, it means that the fit doesn't work both ways. And the persistence, I was taught how persistence can pay off. Was able to pay for a little bit of my college tuition because of some of these commercials and things, and got a lot of really great experience along the way that still carries through today in public speaking and presentation, and just how I conduct myself in public situations. So that's been the formation chapter for me. And I'm excited to talk more about like some of the attempts and failures that have happened along the way.
That's really pretty cool, because I try to figure out again, where that risk taking profile comes from. And, some people it's like athletics at a young age, they don't get the result they think they're going to get athletically. And, there's a delayed
Yeah,
gratification with that. I mean, you're the
yeah,
first guy I've talked to where it's an acting, pursuit. And incidentally, I have a nephew that lives in New York City, and he's pursuing acting and has been for 4 or 5 years now. And
cool.
I, I think that's just something that psychologically is going to develop him to do whatever he needs to do. And he continues down that path and
Yeah,
whatnot. In fact, kind of a non sequitur, but a bit related. He's writing a screenplay, and I was talking to him about this, and he said, "Well, I need to now go pitch it to producers and things of this nature." And I go,
yeah,
"Well, what makes you prepared to do that?" He goes, "It's just basically like acting. So, like,
yeah.
for us entrepreneurs, we have to tell our story over and over, right? When we go in front of
Yep.
a customer or whatever. And then if we're going in front of investors, and I'm not saying you're acting, but you are articulating the story, and you have to kind of get in this persona a
Oh,
bit.
absolutely.
And so he's like has this level of confidence that his thing is going to be successful because of all those probably similar rejections that he's experienced in trying to get parts and
Yeah,
whatnot.
I wish him all the success. Yeah, and if you break down what acting is, it's really a narrator, and
Mhm.
being good at telling a narrative, being convincing at telling a narrative is super helpful all throughout life. So, yeah, if anyone's thinking about acting or doing some comedy or something out there, I would definitely encourage that. It pays dividends in more ways than we know.
Right on, right on. So that's sort of a bit of, I like that how you said it's the formation, it's a bit of your background. Okay, now you go to Cornell, you're studying, you're getting your degree. I mean, I've worked with a lot of designers, product designers, so I sort of get um, where they have the ability to see what's not working, and it's kind of frustrates them, right? When you're building a product or whatever you're doing,
Yeah,
because
yeah,
there's a certain workflow there, and you expect it to be easy and frictionless for a user. So
yeah.
is that why? Now, you started your first thing, but when you were brought in as a co-founder, is that the skill that they saw? Was that your entry point into?
Yeah, yeah. It was UX design and product management, and then I think my partners realized that that kind of touches a lot of things, and I was, being an early stage startup, I was like seeing holes that needed to be filled and was going above and beyond my current role description. And so, yeah, we ended up becoming co-founders together and pivoted 4 times over 4 years, raised uh, a couple $1 million, and then ended up raising $36 million in 2018, which capitalized the company into a seven-figure business that's doing really well today. Um, and it was during those pivots that I really understood the minimum effective dose of customer research, of rebranding, of marketing websites and marketing collateral, fundraising, obviously, and narrative arcs. And so I was able to do that multiple times, and I'm so blessed to have had that opportunity. And as the company started to scale and go from 10 to 20 to 20 to 50, I realized that I like the 0 to 1 stuff a little bit more,
Yeah.
and and ended up pursuing that next. And so I started a kind of an agency or a consultancy with 2 other partners. I was really focused on that pivot moment and that product market fit moment, and kind of became a student of it. How can I learn about this more? How can I, there's new tools coming up every year. There's different prototyping tools. There's different research databases and ways to centralize and analyze user research. There's different productivity tools. Like, right, I've used every Kanban and Scrum project management tools that are out there, and have now been able to find like my stack of 5 tools that are just indispensable and that I use in every company I'm a part of now, and offer those lessons and patterns to the founders that I work with.
Yeah. And I'm going to get into what you're doing now because I think you're helping some people when you're doing this sort of fractional work as a product, senior product, executive or whatever, however the role's defined. But before sort of going there, because you glossed over it pretty quickly in terms of that company and your financing and your inflection points, like you raised a few million. Here's another thing I kind of like to help entrepreneurs understand: when and why did you decide to take in financing? Okay, so you said like
Yeah,
the first round's a couple million, then you said 36 million in 18, and those are two big sort of jumps in rounds. Where were the decisions made, and what made you and your founders confident that those are the right times to raise money for that business? Now, this is just what I do. I ask like 5 questions in one question. Sorry, it's kind of the way my mind works. But if you can kind of sequence that a little bit, because I think one of the things that when I'm interacting with entrepreneurs, I see them sort of struggling with. They know they might need money. They don't know how much, and there's definitely milestones that are accomplished that can help you attain higher valuations. There's market timing.
yeah,
What was going
right,
on
right.
without even knowing a lot about the business per se, but what was going on with those decisions at that time? And maybe you can kind of help give some color to that a little bit.
Sure. Yeah, I can split this into two parts, both distinguished by the market atmosphere. So when I was raising, in late 2018, 2017, the venture market was totally different. We were involved in blockchain, and so there was a lot of heat around crypto, and there's a lot of money in that. Um, and then even earlier in 2015, when they raised the original 1.5, the startup market was hot, and it is not anymore. The founders I'm working with now are having, easily the hardest time raising that I've witnessed throughout my entire career over the last 12 years. Um, and I think that's how we should split this up, is based on how you can get what is the appetite for market, and what is the appetite for risk in the market. Um, if it's a gold rush, it's a lot easier. You're still going to have to go through 50 or 100 pitches before you raise your round, so that there's no doubt an exercise in finding fit between the capital and the company. Um, today you basically need a successful business. Like it's much harder. I know there's a lot of pre-seed companies and shit out there, but they're all looking for unreasonable traction metrics. They're looking for, a seed fund is looking for 1 million ARR. I'm like, what the fuck are you? If they're making 1 million ARR, they don't need external equity financing. They can do that through revenue financing or debt financing or something else. So like, I think the VC world has become just out of touch with what their purpose is. Their VC is a high risk capital deployment,
Yeah.
and their risk tolerance has gone down because of the expectation of LPs, and the market has drastically shifted. When there was appetite for risk and there was capital out there, especially in the crypto world, people were looking for visionary concepts, and that's what Mode, the company I helped start, that's what Mode was doing. The concept behind Mode was to build a platform where attention was the product, just like it is in any social media platform, but to reward the customer for their attention and time, not just keep it all, which is
Yeah.
the normal profit model in the space. So that was kind of a revolutionary idea, and this attention market was housed inside of a media player. So it was like we provide internet radio and podcasts and a couple of other things for people to listen to. And during their time, they'll be shown an ad or two, a couple of surveys, an incentivized download. And what turns from cents into dollars and dollars into tens of dollars can pay for a media subscription or a cell phone plan. And it becomes really meaningful to a lot of people, to millions of people. We distributed millions of dollars to our users. And so that's really revolutionary. I think that concept really played well. I remember really clearly the marketing campaign that we were able to scale on was get paid to play. And I think that inspired a lot of curiosity in our listeners and people who were interested in downloading the product because they were paying to listen or paying to play. And so we were able to get that marketing concept, that slogan, so to speak, got us a sub 40 cent customer acquisition cost or something. It was like really scalable, and we had a really solid lifetime value. So the numbers made sense, and we were able to demonstrate that to our investors. And so being able to tell a good narrative, timing the market well, knowing where your capital should be coming from, are all parts of the formula. But I think it's harder now than it ever has been to raise venture capital, and venture capitalists are most out of touch with their role in the innovation space. Because when you really think about it, VC is fueling the innovators of tomorrow. They're fueling the highest risk, highest return companies that are existing. Because if you're making money, you don't need venture capital. There's no risk and no need for that interplay. So I think there's something interesting happening, and maybe we can talk about this on another episode. But like ideas like micro PE, stuff that's like sub 5 million in revenue, but could become 10 to 100 million in revenue, I think is really interesting for builders like me.
Mhm.
And you can see with the rise in acquire.com and biz buy sell and all these like startup marketplaces that people have an appetite to pay $5-10 million, get a small business loan, finance it in a more traditional way, and use their expertise to scale and optimize the company's return. So I think it's going to be tough for VCs out there and for founders as well. I think maybe we might need to grow a little slower than we have in the past, but that's all fine. Like that all sounds reasonable. When it really got in hand there for a little bit in the early or late 2000s, in my opinion.
Yeah. Nick, that was really well said. And you're sort of saddling, I guess, different macro times in your career essentially, because you've got on the one hand, this sort of frothy environment that you mentioned happening around the 14, 15, 18, 19, 20, whatever, into that. And then of course what
Yeah.
we've seen now, and the pendulum, as you indicated, sort of swung back the other way where VCs aren't, I like the way you sort of characterize it from an entrepreneur standpoint. They're really not doing their jobs, right? They're not believing in that sort of mission anymore for whatever reason. Maybe they haven't seen the results,
No,
et
they're getting
cetera.
squeezed. They're getting
They
squeezed by
got
LPs just like we are. It's like, so the market constraints from the top down. And I'm not blaming them for that. I think that that's just part of the market environment, but it is unfortunate.
Well, and related to that, though, Nick, I've had a number of entrepreneurs on this podcast where the way that they have financed their companies has been more sort of the old school way, right? There's been the seed round, really, like for me and most of my startups, the seed round was family and friends. And no one really loves that. I mean, I certainly didn't
Yeah,
like having my
stressful.
parents
It's
involved
stressful.
and some friends of my family or whatever, because, you carry additional stress, right?
Oh man,
But on the other
absolutely.
hand, it's just another reason not to fail, right? And
Yeah, it's a
so
motivator. Yeah, yeah,
I've always told entrepreneurs, Nick, like, you don't know where your money's going to come from, right? So you have to be willing to take meetings with a wide array of people, right? And the sequence of events could be a dentist. I know that's, maybe they're not that sophisticated, but then they know like
no,
five other doctors, and now you've got
yeah,
250,000 seed round. And so
yeah,
it may not be that this quote unquote seed fund in the city that you live in. And
yeah.
so I think you're probably seeing that not just with your current startup, but it sounds like with some of the startups that you're working with. And maybe you could tell me,
Absolutely.
like, how do you
Angels are
work with
active.
these? Yeah, are the angels active still in your
Yeah,
view?
angels are still very active because people, risk tolerance. If you're making, let's say, $250,000 a year, you've got 10K to throw away, or so to speak, to take a high
Yeah.
risk investment on because you're probably diversified in the rest of your portfolio and some stocks, bonds, treasuries, whatever. Um, and so you want to just like, let's see what this feels like. It's like, I think there's a lot of, former founders, just like you were saying, doctors, surgeons, lawyers, accountants, people that have money that maybe they're putting into real estate right now. And then they couldn't because the real estate was, financing for real estate was really hard. So they're like, okay, let's try the startup tech thing. I've heard good things about that.
Yeah.
So angels are really active, and in all the syndicates that I've either been a part of or have witnessed through friends are moving fast. Um, and I'm glad to see that angels are still doing their part in the ecosystem, which is nice to
So
see.
what's your thought process now on, with your most recent company and financing? I mean, and also sort of
Yeah,
just juxtapose it back to your experience of, a round of a couple million and then a $36 million round. Are you interested in doing that again, or do you feel like the time and the place for that is not now? Is that there's obviously excitement around that, but how do
yeah,
you feel
yeah.
about that level of financing and risk taking now that you've had some experiences with those sort of ventures?
Yeah, this is exciting actually for me in my career because I'm taking what I've learned from software and translating it to consumer packaged goods. Um,
Hmm.
and I don't think that's really done too much, but it's something that I've done throughout my career. Like I've taken design processes that were popular and conventional in architecture or in product design, industrial design, and translated them into software. And then from software design into different sales departments and things. So like this idea of translational or just translating lessons learned from one area to another is super natural to me. One of the things, so we're starting this can water company. It's a CPG product. The mission behind the company is to donate a significant portion of the company's profits to water security projects because water security is becoming more and more of a problem all over the world, from Flint, Michigan, all the way down here to Mexico. And the communities in response to that are buying bottled water because that's safer for consumption. But none of that bottled water is benefiting those communities. So that's kind of the mission of this company, is to like build a brand that is built from that community, that supports that community. And we're just about to order our first round of 5,000 cans. I've got a couple of pre-sold items. Um, we can sell those cans at a decent profit. So the risk, normally I wouldn't test a new company with thousands of dollars. I try to keep it in the hundreds. But the good news is with a product like this, everybody needs water. I don't feel that's, nervous about getting our return. Let's say we spent $3,000 to get 5,000 cans. We'll probably make roughly $3,000 to $5,000 off of that batch. So we're net neutral on the investment, and that's a good indicator for me of whether or not it's worth my time and effort, and it's not going to be a drain on my bank account too much. Um, so we're doing this test, a little bit different of a market test than you would with software. So if with software, I would make an ad before I built anything, test my value proposition in social media or on Reddit or in these native places where people consider new concepts and new ideas, and monitor those analytics. How many clicks, how many views, how many signups did I get from that ad, right? So pretty conventional product testing in the software world. But CPG can't do the same way. I've got a website. We're going to do some ads to measure appetite online to see if e-commerce is really an option for us. But most of the sales for consumer packaged goods happen through retail. So next month, when we get our first round of cans delivered, I'll put our can amongst about 10 other consumer brands in a public park or someplace where there's a lot of foot traffic, and I'll give away water, free water. So that's the incentive for someone to participate in my research. And in order for them to get the free water, they have to kind of look at all the 10 options and give me their opinions on each. So what do you think of when you see this can? What do you think of when you see this bottle? What do you think of when you see this? And do that to 50 or 100 folks, spend a day, maybe two out in that park, and really record that. Each one, I'll have a spreadsheet, I'll have a tablet, I'll be taking these notes, I'll be recording this stuff really scientifically so that later I can go back and cluster map their feedback. Okay, these people are concerned about where the water is coming from. These people are concerned about waste streams. These people are concerned about microplastics and health. So I can understand the psychography of my consumer demographic and build marketing campaigns, sales strategies, brand around those more effectively because I've gone out and tested them, but I've only spent a little bit of money. And then what I'll do with that is I'll take that scientific data and put it into a pitch deck and raise only enough capital to get to my next phase, right? So a partner and I are spending 5-10K to get this to this point, right? A couple of parties, a couple of private events, get this market intel. We've not spent very much because we'll probably make that back. So let's say we're at zero investment. To get to the next phase, if there are positive indicators going on in the market, we'll need hundreds of thousands of dollars. We'll need to hire some sales folks. We'll need to create some content marketing because our brand is kind of comical and contrarian, and so that's where basically the first $300,000 will go, and we'll test it again, look for a couple of partnerships, and we'll get to the second phase. And if the second phase is working well, we'll probably do another 500,000, maybe. I don't think we'll go into the 7-figure range for capital because we won't need to, because we'll be making revenue on each of our production cycles. But I'll try to keep the cap table small, and in this strategy, different than the ones that I've done in the past, I'll be looking for acquisition partners from the get-go. So I'll be talking to large companies, potentially Liquid Death or some of these other big water brands, to see if an acquisition would make sense, because our brand is inherently necessary for them to thrive, right? So like Nestle and Coke and Pepsi and some of these other large multinational conglomerates are not seen positively in the communities that they're serving for the most part. Like they're seen as a little bit more extractive. They're seen as removed from the community. You don't see them anywhere really outside of their brands. So something that's really homegrown and grassroots could really benefit them. And so I'm building this from the ground up with that concept in mind, that benefit to the acquirer, the benefit to the community, and the benefit to the natural world, right? Like we need to be taking better care of our watersheds just generally for our own survival. So a little bit of a capitalist, environmentalist approach, but one I'm feeling really optimistic about. I'm really confident.
Well, Nick, thanks for elaborating that a bit, like sort of your thoughts, your strategy, your thought process around, how you're going to take this to market, the investment you see yourself making at each of the various stages, and maybe ends up not even requiring a ton of capital. Time will tell as you
Yeah.
get more sort of momentum, and there's the manufacturing capability and all this stuff. I'd listen to you. I have some stupid questions for you, and maybe they're not so stupid, but in my mind, I have this I have different rules when I do my startups that I operate by, and one of them has been like, what's my path of least resistance? And so when I hear you talking in the context of sort of your past as a product design person in software, my natural instinct to say is, Nick's path of least resistance is to continue to build software products.
It would
You've now
be.
made this jump into sort of consumer products, and
Yeah.
you're still using your product design acumen, which is sort of, again, another thing I look for in entrepreneurs is what's their superpower, right? And you remind me of someone else I had on here, Justin Johnson, a person we interviewed with Lead Method. He comes from product design, and all his startups are based on the idea or him exercising that muscle. I'm a really good product designer. Now they've all and
Yeah.
he's done well, and he's continued to do two or three more, and he continues to stay in software. So for me, I'm going to just ask my stupid question now, which is like, why take the jump into this consumer world when you have like this ability
Yeah.
to do it in the software world? I mean, you're obviously you must be driven by some like passion, or what is sort of going on in the psychology of that jump? Because I think it's another level risk. I'm not saying don't do it. I think it's great you're doing it. I'm just trying to understand it. So maybe you can tell me why, what's the motivation there to do that? Is it learning? Is it passion? Is it, what contributes to that?
Yeah. Let's break it into three parts. I think part of it is curiosity. I want to learn a little bit more. Part of it is fatigue. And part of it is kind of like, let's call it optimism. So, um, I'm curious to see if I can do a CPG brand in a way that feels good to me, that feels like I'm reducing risk at every turn. Because I think this world, I've spoken to, and not quite advised, but spoken to a lot of entrepreneurs who are starting, different coffee drinks, different alcohol drinks, jewelry, different types of consumer packaged goods and brands, and all of them require a ton of marketing budget, like a lot of money up front. So I wanted to see if I could de-risk some of the execution in the ways that felt familiar to me in a different world. Second is fatigue. I've been behind my computer pushing pixels and doing customer interviews online for 10 years. And I just kind of got tired of being at my desk all day. I wanted to kind of like get out in the world and meet people and have real face-to-face conversations. And was, like I was saying before, a little disillusioned by the venture capital world. Like the incentives aren't aligned between founders and VCs sometimes. And I was seeing that too frequently. Um, yeah. So part of it was fatigue. And then, I see a problem and I think I could contribute to its solution. I don't think I can fix it myself, of course, but like I would be really proud to be a part of a bench of innovators, entrepreneurs, government officials, policy officials who are working together to solve this humanitarian crisis, but
Yeah.
doing it with the strengths that I have, which are in branding and product development. I think, in each of the communities that I'm going into, I met with resistance. Mexico City is one of our first markets, and to see a foreigner get involved in their water system yet again feels extractive, feels exploitative. And so I have a task ahead of me to make sure I'm using community-driven strategies and making sure that Mexicans are a part of the company's formation and investment cap table. So that I'm not at the center of this, that they are. And I think that will be the case, whether it's in Mexico or it's in the United States or if it's in the Middle East, anywhere. I think that this strategy can be translated globally.
Yeah.
Um, and I'm excited to see if the idea can reach that far. So that's where I think the optimism plays into my motivation.
That was super well articulated. I mean, just sort of finding the drive that you have behind this, and I do think those skills are, and they are translating. I mean,
Yeah.
and you're obviously seeing the impact of that. And
Yeah.
just thinking about that sort of executional risk, and in this new sort of environment. And by the way, I mean, as an entrepreneur, we got to wake up every day. Uh, when the the clouds are dark, and we got to find inspiration, especially those
Yeah.
early years, right, that you're now in. And
Yeah.
given that you've done that before, it's not foreign to you, right? And so
I've
I
failed more
guess
times than I've
that's,
succeeded.
yeah, right.
Yeah.
So this is a good piece of advice for people, like it, like I've been through it, I can do it, and it's dark, the clouds are dark, but since you've got that passion, with the optimism as you describe it, to you know, uh, impact the world here essentially in a positive way. And I know a number of, in fact, I met with a gentleman this morning that um, has been a software entrepreneur, done the B2B thing, and they're now focused on sort of climate technologies or whatever. They want to apply that trait
Yeah.
in a way that helps the world. Now, of course, the economics need to be there. One of the things,
Right.
a precursor to this, when you and I talk, that I'm curious about is, you mentioned Mexico City, and here you're living in New York. I don't know if you have dual citizenship. I mean, boom, you transplanted to Mexico City. I know you have a family. I mean, a huge city. I understand sort of fundamentally why you chose that city, and even the country to some extent. But maybe can you explain your rationale, and what were you seeing in the United States that, I wouldn't say discouraged you, but why you obviously had choices, right? What's the market opportunity look like there, and why that decision relative to other places?
It wasn't a business decision. It was a lifestyle choice.
Okay,
And I don't want to sound un-American here, but I probably will. So give me some grace.
you got it.
Um, as a designer, looking around urban America and suburban America, it's really upsetting. Um, let's just start with the built environment. You have contractors and developers, not architects and designers, but contracts and developers creating the majority of the buildings, and they're optimizing for cost and return. So not for civic engagement or aesthetics or environmental concerns. Their priorities are elsewhere, and we've seen that play out in strip malls and 6-lane highways and gray apartment buildings that are awful to live in. Um, but we've seen it in the way that humans interact. Everybody drives everywhere. Like you go to
Yeah,
downtown Chicago in the financial district or in the commerce district, it's busy during lunchtime and dead most of the other time because that's the way it was designed. It was designed not for human interaction or for neighborliness or for walkability, but for commerce. And when you come to places like Mexico, you go to Portugal or Spain or places that have older heritage than America, because America is still a very young country, you'll notice that the heritage is at the surface. Siestas are still a part of daily life in Italy and Spain, etc. Sharing meals, um, walking, mixed development, so stores and businesses, everybody kind of being together, coffee shops, everything's together. And so I just felt alive when I came here, a few years ago, 4 or 5 years ago, and thought to myself, well, what would it be like for me to be happy every day and to feel this inspired and challenged, right? Because I didn't know the language at the time. What a thrilling lifestyle it would be. And I think a lot of people think it's like, oh, it's better climate or it's lower living costs, but that wasn't really the motivator for me. I would live in Mexico City if it was the same exact living cost. I'm here because there's a contagious vibrancy that I felt was really missing from the United States, and I
mm,
felt really disconnected in a lot of ways. Like even culturally, you think about U.S. I know it's going to sound disparaging. I'm patriotic, and I love a lot of what the U.S. stands for. But from an ethnicity standpoint, the people that were inhabited the continent that we call North America now are not. Their culture is not seen and witnessed. Has not been preserved, has not been honored. And every
Right.
culture that came to the United States after that massacre has also been homogenized. I have Italian and Irish heritage, and maybe that finds its way a little bit into the world, but like my grandmother didn't teach my mom Italian because she thought it would work against her. My grandfather's name was Dominic. He changed it to Nicholas because of discrimination. So there was this tendency to remove character, to homogenize culture, and you see that to our detriment today in
Yeah.
a lot of the United States. And so that was one of the reasons why I felt so inspired to live in a country where the heritage is at the surface. Like you see Mexican cuisine honoring its roots in every corner of this city, um,
Yeah.
in the spirits that are distilled out in the farms. In the way that parades are handled and celebrations are held, it's such a beautiful place. It's such an amazing place, and I would love for to absorb and understand how this works. So maybe I can bring it back to the U.S. Maybe we have something to learn here, because I think the dynamic is a bit imbalanced, the way that Mexico looks to the United States and the way the United States looks to Mexico. The United States has a lot to learn and take from cultures like Mexico and Central and South America and Europe, that I feel like we turn our nose up at. And so I think that's one of the reasons why I moved here, was just out of curiosity and interest in living a life that felt more in touch with reality, with the human spirit.
Well, a
Um,
couple things on this. I mean, I actually like this thread a little bit, even though it's maybe out of character in terms of just talking about the pure entrepreneurial experience. But
yeah, it
that
is.
doesn't matter, man. That doesn't matter. What matters is just sort of getting to the psychology of why we do the things we do and where we think we
Yeah.
can be
Yeah, I
successful.
felt
And
at my best. I felt my best here. That's why.
and
You know.
and I'll tell you, I moved to Bend, Oregon, 17 years ago. A city that maybe had 85,000 people, and obviously it's grown for over 100,000 now. But like you, living in sort of the bigger cities, I just felt sort of
Didn't feel.
removed from the community, and a
Huh.
community where I can engage in
That's
and live a
interesting.
life that went beyond just building a business, but actually,
Yeah.
getting off at work at a reasonable time, or not having
Yeah.
be an hour and a half commute to, on either side of the day to,
Right.
sort of waste a sequence of events. And so I think this, if you want to call it a movement, or this type of, exercise that entrepreneurs are doing, and this has all been sort of facilitated through the pandemic, and it kind of continues. You're an example of where you've taken it into another country, and I think that's a unique. I don't want to say unique example, but it's certainly not an everyday thing. And while it takes courage, I mean, it feels to me like your idea of liquid death sort of equivalent in this Mexico City, and Mexico obviously isn't without its problems. I mean, there's high level of pollution, there's corruption, things of that nature, and
Earthquakes.
certainly the clean water aspect is something that people have to deal with, maybe more so than here, right? And so you've
Yeah.
got a,
For
a
now.
market need that might be really acute, and
Yeah.
so
Yeah.
it's a great experiment you're running, and it's pretty cool to see you exercising this entrepreneur muscle in a different product category. So I just wanted to get behind that sort of psychology, and you know let's talk a little bit about um, why you feel like you've had past successes with some of the companies you've been a co-founder or founder in. What about either your successes or failures do you think is going to make you a better entrepreneur this time around? I mean, if you wouldn't mind just sort of elaborating on that a little bit. And we all
Sure.
know there's risk, and I know Nick. I've gotten to know you a little bit. You got a lot of humility around the way that you talk about yourself, and it's hard to talk about ourselves and say, "Gosh, I'm really good at this." But more so, just give me your perspective on either of those contributing factors, success or failure, to so others can maybe sort of extrapolate a little bit about maybe what they might need, and maybe you can articulate that a little bit, if that
Yeah,
makes sense.
I'll keep it simple. It's been a tolerance that's grown over the last decade. I remember one of the first times I was talking to my co-founder, our servers went down, customer complaints were skyrocketing, getting emails all over the place. And I was like really terrified. I was like, fuck, we really messed up here, guys. What are we going to do? We're losing money. And my CTO and co-founder, Kieran, looked at me and was like, no, we're going to fix it in a couple hours. Don't worry about it. He had been through it. He knew what needed to get fixed, what steps needed to be taken. And those were new things to me. Um, and so I fed off of his confidence a little bit, my other co-founder's confidence, and I was able to build my tolerance over the years. And I think trusting in yourself and the team that you have is probably is the tool that'll give you the most resilience in the face of challenge. To not back down and come to the table with solutions, not just problems.
Yeah. No, that's a good point, right? I mean, I can certainly remember my first startup. Every sort of setback felt like we were never going to recover from. And if I can
Mortal.
kind of if I can go back and remember that journey, and seeing somehow that we got to a successful outcome despite all the things, frankly, that I did wrong, and the good fortune of then markets lining up, uh, then it does give you confidence into your next venture to say, okay, well, here are the things I did wrong that I'm going to improve upon, but we're still gonna make plenty of other mistakes, right? And that's okay, because we're going to course correct pretty quickly. And it feels like you kind of now have that innate ability to understand that that's going to be part of the process. Obviously, we don't want to go into it having to course correct, or like your past ventures, pivot 4 times. I mean, you'd rather actually not pivot that much and be successful on your original plan. But I had another guest on here that he said something to me, and it kind of made me think back on the fallacy of having a plan. Even he's like, I didn't really have a plan. This was um, Kyle Morris, who's Special Forces Army Ranger, because in the Army, in the Special Forces, they teach you that at first point of contact, all plans change, and you have to be flexible. And so he translated that type of thinking
Exactly.
into his
Yeah.
entrepreneurial world. And I
Yeah.
thought, well, that is just
That's
brilliant.
great
And it
training.
sounds like you've got that same sort of temperament.
Yeah. That's the
you know
let's start there. Like, don't expect your first plan to work. Don't want that. Like, try not to want that. Expect your first attempt to be your first of many attempts and for you to optimize for learning. So I think a lot of founders will go through their first attempt and be mad, and then maybe they'll try a second attempt if they've got the muster, and then realize that there's a kind of an opportunity, and they'll keep it, maybe make a third attempt. But if you go in with the first attempt with a notebook and pen and are ready to take notes on the first attempt, what went wrong, what didn't go wrong, how to learn from that, how to synthesize those issues, you're much faster to take the second attempt and to take that second attempt with more fuel, with more insights. You're more prepared, right? This phrase, like, luck is where opportunity meets preparation. More shots on goal, iterating, like, right, if you're using design language, iteration
yep, yep,
equates to more opportunities and more preparation.
yep.
So I think the idea and the mindset of being prepared to iterate, being prepared to try a couple of times, it will prepare you for success and resilience much better than the expectation that the first time will work. And I think that that's still really common, even though this train of thought has been written about ad nauseum, um, and has been taught in so many accelerators and programs now for the last 5 years. Um, it's still way too rare, because I think, one of the requirements for an entrepreneur is ego, right? And, like, delusion, and to convince other people of your delusion. And we get a little too caught up in the ego and the delusion sometimes and forget that there's a science to this, and that there is, you need to be prepared for pattern recognition. You need to be prepared for customer feedback, and to interpret that feedback into
Yep.
intention, not just words and, what is said. So that's what I would share is to start the journey expecting to fail, and to bring the supplies for failure so that you can camp out and make it to the next summit.
I like that. Okay, I'm gonna ask you a couple other questions related to sort of your execution. And believe it or not, it's amazing how fast time goes. And when we have an hour together, I want to make the best use of I can. So I do have a few questions on sort of like traits of an entrepreneur and things like that. But I can't. I'm so curious about how you're executing here. I can't get off this one, which is, when you go into the software world, you kind of understand that there's competitors and things of that nature. And through product market fit, as we discussed on this pod, which is sort of understanding what your customers need through iteration, things like that, maybe domain expertise, you're able to differentiate in that market. Now you're taking that product design acumen again, and you're going into the consumer products again. I'm really trying to get my head around, is what are your competitive barriers in this sequence, do you feel like, and how are those different or similar to software product execution, or they're entirely different? And ultimately, how do you see those competitive differences translating to success? Because that's, of course, we all always worry about, well, who else is going to come in behind this and
Yeah.
replicate. And so maybe you can elaborate what you believe, what you've learned through your partners or whatever, from a consumer brand standpoint. What do you think you're going to need to do to differentiate, to capture a top position or close to in this sort of market category?
It's certainly going to be gradual. Um, I think it comes down to incentive alignments. I've got different incentives with a CPG product like water. You've got government regulation, you've got private interests. The incumbents are massive, have huge law departments and funds to spend to drown me, so to speak, no pun intended. So I think I have to figure out and map the incentives here. Um, if I'm going to get sued, maybe by liquid death or a cease and desist, because the concept is similar, or if I'm going to get um, drowned in some regulatory bullshit through a bribe from Nestle or some big multinational corporation, I need to figure out how to get out of that. What are the incentives that matter to those people? And I think one of the tools in my uh, toolkit that I'm going to use is PR. Um, I'm building a company, or I'm hoping to build a company that is good for the communities that I'm serving, and I can use the existing attitudes and beliefs within that community to my advantage, and because I'm on their side. So let's team up. Let's write a story about how I'm about to get drowned, or about how these frictions and powers that be are not letting me find the success that we all need. So I think that there's optics and narratives uh, to use to my advantage. And then there's the incentives, like I was talking about before, in terms of an acquisition strategy from one of these larger companies, is how is my brand going to positively affect and impact them? If I get a cease and desist from someone's legal department, that's good news for me, because now I've got, talking about bending the rules. Now I've got a line of communication with their chief counsel, and that's a pretty powerful position to be in. And so, what is that conversation going to look like?
Yeah.
Or if I'm talking to one of their PR agents or something, it's like, let's talk frankly about how this could come back at you and how much that'll cost you, and how all of this could be a lot easier if maybe we find a way to be bedfellows and make the incentives for the community work, because that's what I'm keeping at the top of the needs pyramid here. Is this actually putting money back into water security projects? And if it's not, then I'll step away, and there's no time worth spending on this. But if we can figure out how to get all these players together to work well to achieve that goal, which really does benefit everybody, I think that there's a real opportunity. So hopefully a lot of this is me mapping the incentives and creating a narrative that aligns all of those incentives in a way that feels easy. That doesn't feel like it's going to be expensive. It's not going to be 10 years until we get to this outcome. It'll be 3,
Yep.
and so on. So yeah, I think that's how I plan on overcoming things in this industry versus what it is in software. Software is a lot easier. You don't have, it's almost designed for disruption.
Yeah.
And I
Yeah.
love that about the culture of software. And so I'll try to take some of what I've learned, and try to translate it, but it won't be as direct as some of the other lessons I've learned.
I got to say, I really love your entrepreneurial spirit in this context because, you know, by listening to you here, what you're essentially saying is, I'm going to take what a lot of people perceive as a negative event and translate that into a positive event potentially. Like how does that create alignment in the industry, maybe with some of those distributors or whatever. And that takes a lot of courage, right? And entrepreneurial drive that this is an important enough problem to solve. And disruption, you're recognizing even some of the things don't translate as maybe more can be more difficult. And ultimately, within your story there, it's going to be your brand that's going to sort of carry you through those challenging times. And as I mentioned, we were talking in advance here. I've got another guest will be on in a couple, 2-3 weeks here. Has built a large company in a consumer product category, and I'm learning a lot every time I talk to you guys because it's just different than software, which is why I want a flavor entrepreneurs here that aren't just software folks. And not to get too much into bending rules now, but why we've had restaurant operators, manufacturers, that have started companies, things like that too. And this is another example of that. And so I'm just I really like, and I think for people listening to this, like taking those experiences, and you've developed a level of confidence where you're able to apply analytics in this environment too, that you believe is going to translate to success. Otherwise, you wouldn't be doing it. So I'm excited for it. I think you got a great mission here. We need to bring clean water into a lot of these environments, as you laid out early on. I mean, this is going to be a problem for decades to come, and this isn't going to be solved overnight. And we need entrepreneurs are likely going to chart that course, because you mentioned some of the bigger conglomerates. They don't have that reputation, right? They don't have that. The brand isn't respected. In fact, it's almost distrusted. It's there, and you have to consume or you don't have to consume the products, but it's almost culturally that people do. And I think that needs to change. You think it needs to change, and it's a good thing. And and as we sort of wrap up here, tell me the name of the company again. I want to make sure everybody gets the name of the company, because I want to follow this, and I want to make sure we got that right.
I don't want to go public with it yet, but let me
Okay.
follow up with you on the company
Hey, we'll
name.
follow
And
your story. I mean, you'll send me the first, PR news article, and I'll do a little short or something to follow up on this.
thank you, Pete.
Yeah, you got it, man. The last thing I just kind of want to close on with you, Nick, and obviously thank for your time today, because to me, I always like to relay something about an entrepreneur they think is important to have as a trait. What you've done, all these startups, kind of, the good, the bad, the ugly. You've had some really good results, and you've had some challenges where things haven't worked. What are the character traits that, if you're an investor like you've been, or just in terms of, you think are most important in the entrepreneurial DNA, if you will, to see a positive outcome?
I would say keep the person at the center of all of your efforts.
You mean the customer?
Thank you for asking that question, because I mean the person at all sides of the table. The customer, I
Okay.
think, is obviously very important, but the team that is building for the customer, they need to be informed about why the customer is important. They need to be talking to the customer themselves. Like, too many of the CTOs that I have advised never talk to their customer. It's always the CEO, and the CEO is always selling to the customer, not listening to them. So listen to your customer,
Love it.
absolutely, um, but listen to your employees and listen to your stakeholders. Um, I think I've done a pretty good job at every company I've started or advised in truly putting curiosity at the center of my engagements with each of those stakeholders. Like, okay, so you want to invest in this business, and you're a GP at a fund. How many investments have you made? How many investments do you have left? Do you have room for follow-on capital? Does this concept match with your thesis as an investor? Are there other portfolio companies that we could complement? Right, really trying to understand. I'm not just taking money from an investor. I really want to understand: are they the right fit
Yeah.
for us? Are they going to benefit us? If it's a new hire, What were they doing for the last 10 years? Is this a big transition moment in their career? What are they hoping to do in the next 5, 10 years? How can I help support that genuinely? And if I can't, then years down the road or a few months down the road, there's going to be friction that I know that I can avoid now because I'm not set up to support you in your journey. So I think if you can put people, and same with partners, right? So like I've been very proud and honored to have partners that I love. Like these are people that I'm going to know for the rest of my life, and we'll share big milestone moments in our lives together, because starting a company together is so bonding and tumultuous. And if you can get through all of that with some grace, you should be really proud of that accomplishment. It feels like, and I mentioned this in another podcast I was on a couple of weeks ago, that love is a big ingredient in company building that I think gets forgotten. So if you can love your customer, love your teammates, love your partners, love yourself, and make sure you're not sacrificing too much of your own mental wellness, I think you got a successful endeavor. Maybe it might not come back in terms of finances. That's happened for me, but those usually roll into something that's material. And I hope that all of your listeners can try to find a place and some room for love and like real curiosity in their endeavors as well.
Excellent, man. Well, I appreciate your time today, and I love that wrap right there on love and curiosity, and just the way you sort of articulate it's not just the customer, but all these people that you're interacting with, and being really engaged with that, not just selling. Because I definitely know I know what you mean by that. I've seen entrepreneurs and start things, and they're always in sell mode. They're not really in care mode and really solving the problem mode.
Yeah,
and
care for this, care for people.
Yeah, they're trying to survive, and I get the survival instinct, but you know the thing is, you got to believe that you're doing something of good value, and then figure out how to get to that place where you're creating the most value for them, and you will survive
together.
But if all you do is sort of like you said, if you're just a great storyteller and you got the bells and whistles, and I've seen that too, and there's some, you need to be able to tell your product story really well. I get that, but I've watched a lot of those companies go bye-bye, I've seen adventure pitches and things of that nature, where everybody thought it was sort of the hot new thing. And this is why I sometimes like interviewing entrepreneurs that have already kind of been there, done that, had success, had failures. They're a little bit more sober in a good way about, what they need to do next. And I think there's going to be a lot that people can take away from this today. And anyways, thanks a lot. I appreciate it. I know you got a company to go run, so on with your day. And I know I'm going to stay in touch with you because I want to know more about this business. I want to connect you with people. Hopefully they can help you with this business, and, be on the sideline watching this thing go. So thanks a lot, Nick. Yeah. And have a great rest of the day. We'll talk again soon.
You as well. Grateful for the role that you're playing in this entrepreneur space.
I appreciate that.
Inspiration,
all right.
Education is a vital part of it all. So
I really appreciate that. It's it really feels good. I think it's part of the entrepreneurial code to give back as much as you can to help other entrepreneurs. So when you and I talked, you kind of saw that, and that's really inspiring to me as I kind of continue to try to bring these stories forward. So thanks again, and let's talk again soon. Onward.
All right. Cheers.
Cheers. All right. Easy peasy, man. The recording's off. Good job, man. And I don't even say good job. I don't really say good job.